Okay, so now we are done with the capital account. Let's move on to the current account. Okay, so we've already included the interest on capital account, which is great. So now we need to put in the salaries like per individual. So here obviously there will be what? There will be bonus. So remember, I don't know if you notice these three things here, they are technically what is it? They are technically your primary distribution items. Yeah, so these are like the primary distribution items that usually you same thing from like the T accounts. Okay, so how much is the salaries per person? Let's check there if there's information about the salaries. Okay, I'm checking here. I'm noticing there's nothing with salaries to do with salaries. There's nothing here. However, there is something in this side of things. So here they're saying partnership agreement clause for salaries provided for the following. We have Josie who's getting 113,400 annually. Very important to note that this is an annual figure, not a monthly figure, whereas Jay's figure is per month, which means that we'll have to multiply it by 12 to get how much are they getting per year. Okay, so here they've given us very critical information. They're saying the partners were entitled to an annual increase of 10% effective on the 1st of December each year. The above allowances have not been adjusted for the increase. So they've given us like the balances there at the top. We can see, right? However, now they're giving us like something to think about. They're saying they get increases every year, but the increases that they're getting are always on the 1st of December every year. And then they're also saying that the above allowances were not adjusted with the increase. So these amounts here, they have not been adjusted for the increase. Already, I'm sure you have to ask yourself now, like, how many months was the increase in the current year, for example, right? So there's December, there's January, there's February, and then there's March. So 4 months of the full 12 months is what the 10% is applicable to. And then the rest of the 8 months, it's before the increase. So we have to readjust Josie's annual salary and have to adjust Jay's annual salary as well. So I'm going to highlight this as an indication of that we've taken care of it. Okay, now we are putting in the numbers. Okay. So let's calculate. So salaries, I'm gonna just make space here. So I'll start with Josie. Okay, this is too big. So Josie is getting 100 and okay, let me double check Josie's amount. Okay, Josie is getting 113,400 per year. Per annum is per year. Okay, so 113,400 per year. So I'll have to do what? I have to divide this amount into 12 to find out how much is Josie getting per month. We wouldn't have to do this if we didn't have to take into account the increase, but because there's an increase, we have to adjust it as well. So I get 9,450. Okay, so now I have taken care, so I know that, okay, so this is how much they're getting per month before the increase. So now I have to do what? I'll apply the increase on this amount. So I'll say 110,000 divide 110% there divided by 100, and then it gives me let me see, it gives me 10,395. So this is how much is their salary after the increase. And then we say that from the 1st of December until the 28th of February 2020, which means that we say multiplied by 4 months, right? If you multiply by 4 months, I am getting 31,185. You get it? So in 4 months, the new increase will give me that amount, right? So now I have what? I have the increase, and then now I have to also do what? Say the original 9,450 multiplied by 8 months. So this is the after increase, the one that I started with. That was like after increase, and then this one is what? The first 8 months, that was before the increase. And then if you multiply those 945 multiplied by, I'm getting 75,000. So 75,600. Then I'll have to say plus what? Plus the 31,185 that I've calculated there at the top. And you should be able to get, let me see. Okay, I am getting 116,235. Again, you are more than welcome to pause the video and work it out yourself and then resume the video again. We learn by doing, not just watching. Okay, so now you're doing for J. J is getting 7,800 per month. So this should be different and easier. So if they're getting this amount per month, so the first thing we'll have to say that how much was it for the first 8 months before the increase, right? So 7,800 before the increase, and then we find out that actually their salary rounded off to 62,400. And now we have to do what? Apply the increase. So 7,800 multiplied by the increase, which is 110 divided by 100, then multiplied by how many months was it? Yes. Then multiplied by the remaining months, which is 4. Okay, and you should be able to get, let me see. You should be able to get like 4K. Actually, I just noticed that we made a mistake. The months are actually let me see. The months that we're working with, if we say December and we say January and then we say February, that's not 3 months. It's not 4 months. It's actually 3 months. So this amount was technically supposed to be for 3 months. So here we could have just said 9,450 multiplied by the increased percentage, then multiplied by 3 months, right? And then obviously we'll get that amount, right? And then here also, it means what? It means that if I say 9,450 multiplied by 9 months, I am getting 85,000. 85,050. So if you add these two together, it will give you that amount, because otherwise then it wouldn't have made sense. Same thing here. The first months before the increase were 9 months, right? And then the last months after the increase are 3 months. So here, obviously, it means what? It means that even this amount, now we have to fix it. So if you say 7,800 multiplied by 9 months, I get 70,200. Okay, so we're fixing this one as well. So this one multiplied by the increase, obviously, multiplied by 3 months, I'm getting 25,740. Okay, so now it means what? It means that you can add these two together. And if you add them, on my side, I am getting 95,940 for each and every, for per individual, like for J, yes. And then for the total, you have to do what? You have to add them together. So if I say 212, 175. this is what the total that I'm getting there in terms of their salaries. Okay, clear. Awesome. Let's continue. Okay, so with the bonus, let's see who has the bonus here. So here they're saying Josie is entitled to a performance bonus equals to 3% of total sales. So 3% of the total sales, we have to figure out how much was the sale. So the sale here is what? 998,400 multiplied by 3%. Okay, I think they've made it easier for us. So bonus 998 400 multiplied by 3%, which is 3 over 100, and I am getting 29,952 rand, which means that I will take it to the total column as it is. Okay, and then now we've taken care of like all the primary distribution things. So in your next step, now that you have your salaries, you have your bonus, you have your interest on capital, then you have to get what? How much is the primary distribution per person? Obviously, you just have to add the 3 things and then you get how much. You add the 2 things here and then you get how much is it. So if you add the salary, the bonus, and the interest on capital, how much are you getting? Pause the video and work it out. Okay, I am getting 167,787 for Josie, and then for Jay, I'm getting 128,140 rands. And then if you add these 2 together, I'm getting 291,927. Okay, so now I have what? I have the primary distribution for all the partners. It means what? We can now be able to work out their share in remaining profit and then obviously finish off the question. Okay, so now we have to do the share in remaining profit. The share in remaining profit is more like your final distribution. Okay, if you still remember how we do the final distribution, it's obviously we say what? We say primary distribution, which consists of your salaries, your interest on capital, as well as your bonuses. Then we minus that from what? From our from our profit as per the income statement, or as per like profit and loss account, or as per comprehensive income. All of those 3 words that I've just mentioned. So here we have what? We have this amount, which is the profit as per income statement. And then we have what? We have the primary distribution here. So these are the 2 amounts that we are going to be working with. So obviously now, if you say this one minus this one, you should be able to get like how much is the remaining profit. So if this is you now writing your exam, first thing first is to do what? Is to say that profit per statement of comprehensive income, and then you do what? You minus what? The primary distribution. You will be able to get this figure that you have to put in here, right? And then after getting this figure here, then it will also do what? Propel you to go back and find out if you can get like what are the terms of sharing in the business. Okay, so first thing first, let's do the working. So if you say 311,133 minus 291,927, what are you getting? You pause the video and you do the working. Okay, on my side, I am getting 19,206,000. So this is the amount that they are going to be sharing, and we don't know at this moment how much is one person getting. So the only way to find that one out is to go back to additional information to find out if they've said anything about the sharing. Okay, I am noticing something here. So here they are giving us like the sharing information, and they're saying Partners share remaining profit or losses in the ratio of their capital balances at the end of the year. So they're sharing the losses and profit according to what capital balances at the end of the year. Let's go back to the capital account and find out how much were the capital balances at the end. Okay, so the balances at the end of the year here, we have for Josie we have 280,000, right? And then for Jay we have 350,000 at the end of the year, and then the total is 630,000. So this is what they are going to be sharing their profit using. Okay, so how do you work it out now in terms of figures? So here I'll make space and be like Josie. So I'm assuming from Josie, we will have to, obviously, how much is the total profit that they're sharing? They're sharing 19,020, and yeah, you get that amount. No problem. And then you say what? Then multiplied by how much is Josie's capital contribution in the business. We noticed that Josie actually contributed at the end of the year. This is what we're looking at according to what they've told us. So we'll say what? We'll say 280,000 divided by the total amount of like how much in total is the capital in the business. So 280,000 divided by 360,000. 630,000, yes. Okay, so we'll say 280 is up to you whether you put in all the other zeros, or you can just say 280 divided by 360. Same thing. I'm just omitting zeros. Okay, and then for J, we will do the same thing as well. J, they're sharing from the 19,006 multiplied by their capital contribution in the business, which is 350,000. So we say 350,000 divided by the total amount of capital in the business. So this is how they are sharing their profit. So now that you have something like this, please calculate. You pause the video and you calculate for Josie. You pause the video and you calculate for Jay. Okay, for Josie, I am getting 8,536. And then for Jay, I'm getting 10,670. If you add these two together, it should give you 19,206. If it doesn't give you that amount, then it means that you did something wrong somewhere. Okay, so this is how it looks like, right? So we are done with this side of the this side of the current account. So now we can move on to what? Taking into account drawings. So drawings, obviously, they have to do what? They reduce money, right? So obviously they are going to be in brackets. Let's find out if they have drawings according to each person in the business. Okay, so first thing I noticed Josie here. They had what? An opening balance of drawings of 26,409. Okay, 26,409. Is there any additional information about drawings for Josie? Oh, there is. They're saying Josie took goods from stock for a personal use. The selling price was 9,590. Okay, and they're saying goods are marked up by 75% on cost. Only the trading stock entry was processed. Okay, very important to note that, like, if an owner takes trading stock from the business, we always record it as drawings on cost. When we record that as what? As a drawing, it will be recorded on cost, not on selling price. So it means what? It means that we need to work out how much was the cost here. So we have a selling price of 9,590, and then we have a markup of 75%. So let's see if we can work it out. Okay. So I make space here and I say Josie. Okay, and then how am I working it out for Josie? Okay, so it's 9,590. Right, so this is what? This is the selling price, right? So the selling price must be reduced to make up what? To make up like how much is the cost of that. So I will say what I'm looking for. I'm looking for the 100% original amount. Then I will divide it by what? Divide it by 175. And then you are welcome to do what? You pause the video and calculate. Okay, and then if you're calculating here, obviously I am getting 5,480. So this is the original cost of what? Of the goods that this person Josie took. So you would add that with what? With the original drawings to get what? The total drawings that this person actually took for this year. So the original drawings here, as per the information given here, was 26,409. So 26,409. Add these two together, and the amount of drawings for Josie, it ends up being around 31,899. Yo, I don't know. Today I'm having a lot of Zoomer problem. But anyway, let's continue. Okay. So this is what we have for Josie. Let's calculate for J. Okay, how much are drawings for J? So we're going back up. Let's see. So J's drawings are 57,403. 57,403. Okay. 57,403. Okay. Is there any other additional information for J? So we go back and look. Oh, there is, right? They're saying J took business check to settle his personal telephone account. So they took cash from the business, right? So their drawings is cash of 5,100. So we have to do what? Add those two together. So 57,403 plus 5,100. What are you getting? Okay, on my side, I am getting 62,503. So this is how much drawings are for J. So now that we have these things, we should be able to get what? We should be able to get like the retained income for the year. How do you get the retained income for the year? Okay, so getting your retained income for the year, obviously you will have to say what? You will have to say, okay, let me do this. I'm going to highlight this. So you will have to say what? You will say primary distribution plus share in remaining profit, right? Then minus what? Drawings. And then you get what? You get retained income per person. Okay, I repeat, primary distribution plus share in remaining profit plus drawings. Okay, so if I add those two for Josie, I am getting, okay, and then the question is, what am I getting for J? You pause the video and you work out how much is for J. Okay, so remember, these are the amounts, the three amounts we are taking into account. Okay, then I am getting 72,307, and that is for J. So now I have what? I have the retained income for the year for both parties. So the next thing, obviously, I have to do what? I have to get like how much was the balance at the beginning of the year for both persons. Remember, this is a current account, so we'll look at the opening balances for the current accounts for both parties. So here we are given 22,360 current account on the 1st of March 2019 for Josie. So they're saying it's a credit balance. So it means what? It means that it's a positive balance. Then the debit balance, it means what? It's a negative balance. So 22,360. Okay, 22,360. Okay, and then for J, I think it was 10,100. So these are the amounts in terms of what today are current balances at the beginning of the year, which leads us into calculating what? Into calculating the balance at the end of the year. You get it? So it should be easy now that we have what? We have the written income, we have the balance at the beginning. So you just add these two and then you get the amount. You minus these two and you get the amount. Okay. So in this case here, let's see how much are we getting here. It's 14443. Okay, for Josie, I am getting 166,794. Okay, and then for J, I am getting 62,207. Okay, so obviously I'm not done with this question because we need to put in the totals. So you can put in the totals on your side. And then here, in terms of like the profit according to the income statement here, what you will have to do here, this is basically your share in remaining profit plus your primary distribution. And then you get the one at the top. So it's